Let's start with SABMiller closing at the top of the top 40, and we had a fourth quarter earnings update out from that company. We're up 4% at 225 Rand and 60 cents.
Yeah, good result, and certainly large components of the index today. Quite a huge volume going through SABMiller shares, well received, beat analyst expectations, 52-week high for the stock. Positive news all round, and incidentally, SABMiller quite a good proxy for the global marketplace. They operate in pretty much every country in the world, and earnings up was just almost in every single sector.
But from a valuation perspective, at 225 Rand, where is this one going?
It's not cheap. It's trading on a forward PEs of around about, I think, 12 or 13, current PE of about 18. So it's not cheap, but it's certainly, you spoke earlier about annuity income. This is certainly one of those ones where it turns in consistent profits. What we've seen, which has fallen flat in the other earning sectors, as we spoke about, is the revenue being flat. Revenue up in a lot of these sectors, profits up. So, very good set of results. I don't think it's going to fall in a heap and see 200 again in a hurry, but it's not cheap where it is.
Nick, Goldman's doubling operating profit, and if we look at these US banks, come now.
Free money.
Free money. You're
Exactly.
borrowing money at 0%, and you're investing in long-term treasuries at a 3 to 4% return. It's not rocket science that they should be posting some kind of profit.
People call it the Bernanke put. You can't really go wrong at that rate, and the results speak for themselves. The most outstanding. The absolutely printing money. To turn that much profit in the space of 3 trading months is extraordinary. The question is, I think this will be a little bit of a political backlash. It's no secret that they've been investigated now. I see the FSA in London were investigating them too. They are making obscene amounts of money, and I see they put aside, I think, $44 billion in order to pay various different compensations and everything else. It's huge money.
But they're basically playing the fixed income environment.
Yeah, that's exactly right, Bronwyn. That's all they're doing. And as you said, it's free money. Yeah.
The Goldman Sachs SEC scenario, is that going to be contained to the investment banking arena and not filter through to Main Street banking, if we use that term?
I think this is quite a one to watch. I think the investment banking model itself is probably under threat. I think the investment banking model will be very different in a few years' time if a lot of the regulators have their way with it. And if you delve down into what's happening with the Goldman Sachs and how they made their money on subprime, it makes for quite watering reading if you certainly are an investor with them. It wasn't exactly fair play, to say the least. But I think you're right. I think the retail bankers, and that's sort of the Main Street, will continue to churn on and try the best they can to make money. But this investment banking model, where you're playing both sides of the market, like the likes of Goldman Sachs and certainly, Barclays, JP Morgan, that like spring to mind.
What impact is this news flow, including the earnings, having on the volatility index?
Well, it's still sitting near the lows. The VIX was down towards 16.5% end of last week. After the news broke late Friday, popped up to 18%. Of course, yesterday back down again, Dow back above 11,000. Someone's referred to this as being, this really slow grind every single day. We sort of just ticking up 0.5% on the S&Ps. And understandably so, the volatility has died down. And we think the markets are very erratic at the moment, but it's a tale of two markets. You walk in the mornings and the markets are fairly subdued and the markets are down. European markets under pressure, the euro under pressure. And then as soon as the American markets open in the afternoon, we get that little bit of a pickup again. So it doesn't bode well for guys who are trading for a living. But for long-term investors, it appears that the momentum still continues to be to the upside.
When we get a trader into studio, we've got to delve into your instinct. How do you think this is going to pan out? I was talking to John Malden yesterday, CEO of Millennium Wave Investments, and he thinks that government debt globally is going to cause the double-dip recession.
For me, it's a real tale of two sides. We're getting a lot of economic data that's coming out that is very good. The earnings appear to be better. We had the likes of really good barometers, things of Intel, UPS, General Electric, a lot better than market expectations. But there's still significant headwinds. When the fiscal stimulus is withdrawn, China are trying to curb rates. We have pretty much travel in Europe completely stopped for last week because of the volcano out of Iceland. I think there's a Greek, for example, the Greek issue hasn't gone away. We are seeing the cost of insuring Greek debt hit another record yesterday, hit another record today.
So very quickly, are you leaning to the negative on this?
I'm leaning into the negative, yes.